All right, Jonathan, thanks. Well, progress in the fight to reduce inflation. That is what experts say in that latest report from the Bureau of Labor Statistics. And in studio this morning, we have economist Russell Evans to explain how this impacts Oklahomans going into next year. Russell, welcome to the show. Thanks for being here.
Thanks for having me.
All right, so let's talk about this. Consumer prices rose more than 3% in November compared to a year ago. And then also inflation, it's fallen from 9% last year. You track these trends all the time. Do you agree this is progress here?
Yeah, I think it's progress. Of all the reports that came out this week, the inflation report, I think, was the most ambiguous. In the headline numbers, the 3% inflation rate that we all saw in the headlines, but behind the headlines is the core number. It's if we strip out some of the more volatile things that are in the calculation, it really gives us a sense of where policy is heading. And that number came in at 4% year over year, which is not uncommon. Going into an inflationary cycle, your core number is below your headline number. When you come out of the cycle, your core number is above your headline number. And so in that report, if you track it over the last 9 to 12 months, unmistakable progress. You're going to say we're heading the right path. If you look at just the last 3 months, that core inflation number is sort of ticking back up just a little bit.
Okay.
And so it depends on your perspective here, whether you're looking at a 9-month window or a 3-month window. Overall, I think it marks progress. I think we're on the right track. But there's a little bit underneath the calculation to be concerned about.
All right, so you're still checking those trends.
We're still
for
checking.
us.
Yeah.
All right, so gas prices. Some people point to gas prices. Those being lower for the past few weeks is a reason for why the progress has been made so far.
Yeah.
Do you agree? What do you think the cause is here? If it's not gas prices, and how do we keep this up?
Yeah, when you look inside the numbers, things that helped inflation come down this last cycle, gasoline prices were lower. Clothing and apparel prices were lower. Used car prices that had been trending down for about the last 5 or 6 months actually jumped up just a little bit in this last reading. Home prices are still kind of an upward pull on inflation, but I think those will move in and become a downward pull. And so when you sort of digest the numbers, there's no doubt that gasoline prices are pulling a little bit on that headline number of inflation, which is probably good news as we head into a holiday season. The reason for it, lower oil prices, right? Like all the normal explanations. I think maybe the bigger takeaways on the gasoline price front is that many of us see those prices posted every time we drive around, and that's how we form our inflation expectations. So people will look at those falling prices and they will think and expect that inflation is falling faster than it really is. But that psyche might be positive for the consumer because that's the thing that's feeding their impression.
That's what you can see
that's
right
what
there.
See.
Okay,
right.
So switching gears here to jobs, nearly 200,000 jobs added to the market here last month. I mean, what does that mean for Oklahomans? Unemployment also down as well.
Yeah, I think overall the employment report was the easier report to digest. I think it suggests that the labor market is cooling just a little bit, but not breaking. Mm-hmm. 200,000 jobs added nationally. About 30,000 of those jobs were the auto workers that had been on strike and went back to work. So it's really closer to 170,000 new jobs, which is a little below the 250,000 a month baseline you might have for is the labor market strengthening or weakening? So anything below 250 is a little bit of a soft labor market. So that suggests the labor market's cooling just a little bit. The unemployment rate number jumped around a little bit. I wouldn't read too much into the unemployment rate number right now. Overall, it suggests that the national labor market is strong but cooling the way the Federal Reserve wants it to. The Oklahoma market is still relatively strong as well.
All right, and let's talk about interest rates.
Yeah.
We're seeing those hold steady for now, but how does this all play into each other when we talk about the interest rates, when we talk about jobs, when we talk about inflation?
Yeah, putting it all together, I think, is the job of the Federal Reserve, and I think this is where the conversation gets interesting. The Federal Reserve opted this week to hold interest rates steady, which surprised nobody. But what was interesting is in their communication, they didn't signal any fear that they were losing control of the inflation fight. And they didn't offer any stern language to markets to say, hey, you guys better not get ahead of yourselves here. And so they kind of sent a green light to markets to rally. They kind of signaled, hey, we might be done with the harshest, the strongest of our policy. And we're anticipating slow enough economic conditions next year. We're going to anticipate cutting interest rates 3 or 4 times next year. So bond markets rallied, stock markets rallied, everything rallied on the heels of that announcement. If you look at their statement, though, I think there is reason to think that they're seeing a much slower economy in 2024. And so maybe the rally might be somewhat short-lived as we get to the end of 24, into 23 and into 24. we might have a very different market posture by the time we get to the spring of next year.
And just to piggyback off of that, I mean, heading into the next year, are you feeling optimistic when you look at these trends right now?
I think you have to be feeling more optimistic than you have been previously, right? I've been pretty pessimistic in the sense that anticipating that as we transition out of this policy stance, we'll have to have a recession or some weakening economic activity. So far, the Federal Reserve seems to be playing it just about right. They're on target for a soft landing. We might win the inflation fight without really disrupting the labor market and driving unemployment rates higher. But there's a whole lot that still has to happen for all of that to come right. And so, yes, feeling a little more optimistic, but I think it's too soon to celebrate. I think you enjoy the rally you get here at the end of this year, but position yourself for what might be a little bit of a bumpy start to 2024.
All right, Russell, thanks for coming on and giving us this really key insight into what's going on that national level here. All right, we have more news and weather coming up after this break.